Who's going to win the prediction market race? It might not be who you think. It's something that we've been thinking about a lot at Low Tech. Prediction markets have shone as a beacon of alternative focus for lots of different reasons. There's the element of, is this just a new way for people to gamble? But underlying the prediction market narrative is this idea that this is potentially a different primitive, a different way of managing risk or expressing a view or hedging out a risk that you would previously have not been able to hedge directly. If you wanted to go and hedge a particular political event in the past, the financial instruments in the traditional markets were just not there. You had to use a proxy. Did you want to use an FX rate potentially? Did you want to use an interest rate swap? Did you want to take a position in an equity index as a way of expressing this view that might not naturally sit within the finance sphere? And so prediction markets step into that space. But with that, and with the proliferation of different venues, you have to ask a question about who is going to provide liquidity into these venues, and how is that liquidity going to be consistently provided in the depth that's required to offer genuine hedging capabilities for large businesses, hedge funds, insurers, and others that might have a view or want to take a position. That is the premise of the question. Do prediction markets have a liquidity problem, or will they have a liquidity problem? And how will they solve that? If you have one market on, say, Kalshi and another market on Polymarket that look similar, a lot of the devil is in the detail of how these two markets will settle. Are you actually hedging the same thing? Are you trading the same thing when you trade in these markets? That makes providing liquidity something that Low Tech do into these markets. So how are the prediction markets going to go about solving this? Sure, they're partnering with some of the biggest market makers, liquidity providers in the space. We know that Susquehanna in various forms is deeply involved with Kalshi, Robinhood, and others as they look to build out their prediction market businesses. And this is not just a retail, sports, gambling play. This is definitely a play which looks at the institutional side of what a prediction market can be. Now, there's arguments about whether this is genuinely a new primitive or not. At the end of the day, these are just binary options. Those have been around for a long, long time. So there's nothing fundamentally new about the pricing or the mechanics of what's going on here, but the breadth of markets that are being offered and the focus of the people that are building these businesses is definitely different, and that's new.